Imagine someone tells you they've built the future, a company that could change how the world works forever. Now, imagine that same person suddenly says, "Would you like to buy a piece of it?" Sounds exciting, right? But before you reach for your wallet, ask one simple question. Why are they selling now? Because in the stock market, every buyer needs a seller. If you're buying shares, someone else has decided they're ready to sell them. And when it comes to AI company, those sellers are often the founders, early employees, and venture capital investors, the people who know the business better than anyone else. That doesn't automatically mean something is wrong, but it does mean one question deserves your attention. What do they know that you don't? Artificial intelligence has become the biggest investment story of this decade. Every week we hear about new AI breakthroughs, billion-dollar funding rounds, and companies racing to build smarter models and larger data centers. Investors are excited because AI has the potential to transform healthcare, finance, education, transportation, and nearly every major industry. And honestly, that future could become reality. But history teaches us something important. A great technology and a great investment are not always the same thing. Many investors believe that if a company is building the future, buying its stock must automatically be a smart decision. Unfortunately, markets don't work that way. A company's future matters, but the price you pay matters just as much. Even an incredible business can become a disappointing investment if expectations become too high. That's why experienced investors don't just ask, "Is this company amazing?" They also ask, "Is today's price already assuming everything will go perfectly?" That's where many people make expensive mistakes. Now think about the people selling these shares. Founders spent years building these businesses. Early employees accepted lower salaries because they believed in the company's future. Venture capital firms invested when success was far from guaranteed. After years of taking risks, many of them are choosing to sell part of their ownership. That doesn't necessarily mean they're losing confidence. Sometimes they're simply reducing risk, raising capital, or turning paper wealth into real money. Those are completely reasonable decisions. The important question isn't why they're selling. The important question is, why are you buying?
If this story feels familiar, that's because we've seen it before. Back in the late 1990s, the internet was the hottest investment on earth. Investors believed every company connected to the web would become the next big success. Money poured into the market, valuations exploded, and hundreds of companies rushed to go public. Then, reality arrived. Many businesses had exciting ideas, but they couldn't generate enough profits to justify their sky-high prices. When expectations finally collided with reality, billions of dollars disappeared, and countless investors were left holding stocks that never recovered. A similar pattern appeared again during the SPAC boom. Companies reached public markets faster than ever. Investors rushed in, and excitement pushed prices higher. But once the hype faded, many of those companies lost a significant portion of their value. Now, the spotlight is on artificial intelligence. Technology companies are investing hundreds of billions of dollars into AI chips, cloud infrastructure, and data centers because they believe AI will shape the future. There's a good chance they're right, but investors should ask another important question. Can today's valuations be justified by tomorrow's results? That's the challenge. Great businesses can still become poor investments if investors pay too much for future growth. So, does this mean every AI company is overvalued? Not at all. Some of today's AI leaders may become the biggest companies of the next decade. Others may struggle to meet the enormous expectations already built into their stock prices. No one knows exactly how the story ends, and that's the point. Successful investing isn't about predicting the future perfectly. It's about managing risk, thinking independently, and avoiding decisions driven by fear or excitement. So, before you invest in the next big AI IPO, remember this. Don't just ask whether AI will change the world. Ask whether the stock you're buying is already priced as if that future has already happened. Because the smartest investors don't chase headlines. They ask better questions. And sometimes the best investment decision isn't buying first. It's waiting until the price finally makes sense. If you enjoyed this breakdown and want more videos that simplify complex investing topics without the hype, subscribe to the channel. Thanks for watching, and I'll see you in the next video.